Hello and welcome to Investing Confidential. There's been a lot of comments, a lot of conferences, a lot of global geopolitical nonsense going on this week, but there was one comment that was only picked up by one news outlet that could be so significant, more important than the Fed, more important than China, more important than anything, that could rattle the markets more than anything we've seen in the last 20 years. And I'm going to talk about that in a second. But first, let's talk about this. The markets say this no pivot. Okay, I've been saying for a while that there's no pivot. Okay, the inflation's coming off, but there's no pivot. So we had this big bear market rally. Everyone bought the market. Everyone's excited, and then again, you had some comments out of Bullard from the Fed. They were very hawkish, very hawkish, and really just zapped the air out of the pivot crowd. Okay, call them the pivot crowd. Okay, one thing he said was that the rates have had little to no effect on the economy. Well, that's not true. Okay, the guy's talking out of his, you know what? The rates have had an effect. Okay, we have mortgage rates at 7%. We've got, short-term rates at, almost 4%. We've got all of these things. Credit card rates are through the roof. I mean, they have had an effect, but not significant effect yet. They have taken off. We've seen rents, we've seen used car prices, all of these things coming off, but they have not had a significant effect yet. But to say they've had little effect is ridiculous. But again, it's hawkish. Second thing he said was Fed funds between 5-7%. Look, the terminal rate is going to 7%. We talked about the terminal rate. It's, watch the 2-year bond, the yield curve is being inverted. Rates are going higher. Okay, rates are going higher. The dollar has reversed again. We talked about it hitting support levels yesterday. It's going back up again. Bad for stocks, bad for gold, bad for commodities, bad for everything when the dollar goes up. But that's the bottom line. When you have a market reacting on Wall Street garbage, okay, and CNBC garbage saying that we're going to have a pivot and Fed, don't listen to these people. Just listen to the moneymakers. Listen to when the Fed speaks, just listen to it. That's all it is. You can't listen to these talking heads anymore. There's too many of them. They get paid for talking nonsense, and that's what's been coming out. It's nonsense. There's no pivot. Absolutely no pivot in the short term. So when the market goes up for pivot, just fade it because there's no pivot. And 75 basis points? No. And 50 basis points? That's baked in now. Okay? 75 is not out of the question, but 50 is 100% baked in. And then the most important thing now is, what are they going to say? Are they going to be hawkish? Are they going to say, well, maybe we'll lower it? Now, the curve says 25 on the following meeting in February. I don't know what they're going to do. Nobody really knows. But since the Fed has been telling you that they want to gain their credibility back. The Fed has lost all credibility. They want to gain it back. So they're going to be hawkish. It would be shocking, given all of these numbers, especially with this retail sales number, which, as I said yesterday, is fake. But the number is the number, and they're not going to come out and say anything that is, let's say, to lead the market to think that they're just going to stop raising rates. I mean, it's not going to happen. So 50 basis points baked in. 75 is out of the question now. Okay, as of 2 days ago, the market was, all the talking heads were saying could be 25, whatever. No, it's 50, 75, not out of the question, and no pivot. Bottom line. But again, as we mentioned, what does this mean? This means the economy is very, very weak, as we've been saying. The rates have had an effect, but you've had a bubble that was popped. The COVID bubble has been popped. So the economy is extremely weak. The global economy, Europe, China, very weak. And so we are in a global economy. So to say that, it's the rates haven't had much effect, whatever, is nonsense. The rates are going to have a significant effect. And by the time the Fed does pivot, it's going to be too late. And it's too late for the economy and too late for earnings. So, buying the market into a, downward earnings cycle is insanity. You're just going to lose money. Okay. So look at this. So here we have a yield curve that's inverted. It's inverted the most since 1982. The veracity of the inversion. So this yield curve inversion, okay, where short-term rates are significantly higher than long-term rates, it's incredibly recessionary. I mean, it predicts the recession. It's a leading indicator. So, I mean, people like myself really believe we're already in some type of recession, but it's going to be baked in. The recession is getting more baked in every day that we see that this yield curve remains inverted. So, it's going to happen, and obviously it's going to be very bad for. I think it's going to be very bad for real estate and everything else that's out there, anything consumer related. One of the things that I think also is going to be a effect of the yield curve and weak economy is unemployment. We're already seeing massive amounts, as you've been seeing, tech companies, auto companies, everyone's laying off. We're going to see I think the unemployment rate is going to hockey stick higher. We're going to have a huge move in the unemployment rate because the unemployment rate at 3.6%, and we talked about it 2 weeks ago in the video, is a manipulated number. It makes no sense. They don't. It's not a number that it's been a number that not based in fact. They've been calculating this number the same for years. They haven't changed, and it doesn't tell you anything. So we don't have 3.6% unemployment. It's much significantly higher, and so the overall rate is going to go higher because we're seeing the effects of a very weak economy globally, meaning massive layoffs. But on the flip side, we talked about inflation coming off, but being very sticky. Here we look at Disney raising prices across the board. This is inflationary. The other companies are doing this. Why is Disney raising prices? Not because their stock price came off, but because everything else is expensive. They have to keep their margin. They have to run a business, so they have to raise prices. Other people are raising prices. So again, despite the economy being weak, despite everything else, and inflation coming off, it's going to be very sticky for a lot of these reasons. I want to mention some things here about Ukraine, because again, this is part of this whole global community and inflation. So again, the Ukraine peace talks was part of one of my catalysts. Before this, we had this big 1 or 2 day rally. And the Ukraine peace talks, there were some comments about it before the election. And obviously, this is really political. It's really sad to think that Ukraine's leader is really become a politician, a U.S. politician in a sense, because now that the Republicans they've got the House, but not much of the House, you have these comments here, these demands for peace, which are never going to be agreed upon by Russia. Crimea, all this. I mean, he's look, I understand. He's Ukraine. It's a blood war. He's going to say this, but these terms, there's not peace terms. Okay? It's not going to happen. If anyone who understands Russia, that the Russians are going to balk at this. So what does this mean? That means the war is going to continue to escalate. They're asking for $30 billion. The Biden administration, it looks like they give them $30 billion. Can't be blocked in the short term because the Republicans won't have the House till January. So look, it's going to go through and the war is going to escalate, inflationary and very dangerous. So it adds to this angst that we all have, that the economists and everyone else has. So it's just another negative bullet point out there. Now I want to talk about this this COP27, this COP27, hypocritical conference that was had in Egypt. You had all these talking heads flying their jets in there. I mean, it's just absurd. I mean, look, everyone, I don't care who it is, realizes that we've polluted the earth. Okay, the pollution is a major problem. Drinking water, the air, the sea, it's all been polluted. It has to stop. No one disputes that. But to constantly have these climate change conferences, and then you have Egypt. Okay, Egypt probably made a deal with the devil, so they're going to sell more energy to the EU and sacrifice its own people because they're short energy themselves. So why is EU sending all energy to Europe? And if you and talk about another hypocrisy. So the European citizens have already gotten their energy bills whacked at 80%, 60 to 80%, except for France, 60 to 80%. And yet the price of natural gas, which is really where all the energy comes from in Europe, is below what it was even before the pandemic. Yes. I've shown a chart. I mean, I could show you a million charts. And so the U.S. and everyone else sending all this energy, and Europe gas is down, and yet the people are still paying high prices. It's absurd. It's absolutely absurd. And then you've got this climate conference in Egypt. I mean, it's all hypocrisy, folks. It's all hypocrisy. But from an economic standpoint, it just leads into this whole ridiculousness where you're sending all this money to the EU. They've got more gas than they need, and yet in Egypt sacrificing their own people. And the U.S. we got areas of the country where there's moratoriums on natural gas, where people are using heating oil, the most disgusting thing you could do to heat your house, because we don't have pipelines to ship gas over. It's all ridiculous, but again, inflationary. Okay, all this is inflationary. And let me talk about something that's deflationary, which is China. So China had a big rally last couple of days. We spoke about it. This zero China policy. Everyone said, "Oh, zero COVID China policy." He said, "Oh yeah, well they're relaxing the travel for foreigners. All of this. I mean, this is nonsense." Okay, China is not going to get rid of zero COVID policy anytime soon. There's going to be no change in policy. Why? Because the government told you that. You don't want to listen to the government? Okay, in China, you have to listen to the government. They're going to tell you what they're going to do. Do not listen to Wall Street. Do not listen to CNBC or people on the internet saying, hey, Chinese stocks could be a buy. They're going to reduce this zero COVID policy. It ain't going to happen. And I'm going to tell you why it's not going to happen. You could see here. COVID cases in China are rising rapidly. China, like other places like Europe, like Australia and New Zealand and Canada, they went to this zero COVID, try to isolate the country. Look, science tells you that COVID is gonna whip through your society. There's no way to stop it. Okay, you could take vaccines, you could defend yourself against it, but to try to ring fence to prevent it is impossible, and China is suffering right now. So sure, if you're a foreigner, instead of waiting 10 days, you can go 7 days in quarantine. To me, it's ridiculous. I'm not going to go to China anytime soon if I got to sit in house arrest for 7 days, but that's the reality. And China will continue with the zero COVID policy. It's very bad for its economy. They're suffering. The people are suffering. The consumers aren't doing it. They're not buying homes. They're not buying anything. And so again, if you expose it to China, if you're an Apple, if you're an auto company and you're exposed to China in many different ways, you're going to suffer. So I don't know how Apple has avoided this so far, and the third quarter numbers seem to be okay. I think there's a lot of financial engineering going on, but at some point they're going to bite the bullet. Okay, and so these companies are all going to show that their exposure to China, historically they did it because they thought it was going to be really good. It's going to be really bad. Okay, finally, I want to talk about this comment I made in the beginning about this news. So there was some conference, oil energy conference last few days, and some comments by one of the executives of Oil Aramco, basically saying, as you can see here, is that there's a reserve issue around the world. You read between the lines; they're telling you something that, if it comes to pass, is going to be so significant. Saudi Arabia has been where everyone has gotten their oil. Okay, it's been the engine of oil production for decades and decades and decades. Okay, I don't have to tell you that; everyone knows it. But as you can see here, okay, so Saudi has been producing oil, millions of barrels of oil a day, and yet they keep telling us that the reserves never go down. This is a scientific impossibility. Okay, impossible. When you produce oil reserves, okay, these specific oil reserves, when they get drained, they go down. When you take oil out of the ground, it goes down. Now, there's oil in other places, yes, but this particular field that they've been draining for decades, their main oil reserves, have got to be lower. And they're making this indication that they may for the first time give a real assessment of their reserves. And if they do, it's going to be very, very significant. Oil prices most likely will spike significantly higher. Okay, oil prices are down today. No one's paying attention to this news. But folks, if you see Saudi coming out with real numbers on their reserves, because no one knows, but again, as I said, it is a scientific impossibility that oil reserves in a specific place that have been drained for years never go down. And if you want to understand it, there's a great book out there, History of the Oil Industry, called The Prize. Okay, The Prize. It's a very difficult read because it's very thick and it reads like a textbook, but it is one of the most interesting books I've ever read. And if you want to understand the oil industry, it's a must read, an absolute must. I think there's also maybe a Netflix or some kind of documentary. If you don't want to read, do that. But I think the book is fantastic, and if you read that book, you'll understand what I tell you when I tell you that if Saudi comes out and gives their real assessment of their reserves, it's going to have to be lower, but that is going to kick the oil industry in the teeth, okay, in a positive way. And oil, well, kick the teeth of the economies around the world, but oil prices will significantly go up because, again, Saudi is the oil producer of the world. So that is something that you really need to pay attention to. Oh, and finally, I just want to mention, so JP Morgan came out, and I'm just going on a rant here. JP Morgan comes out and says they're going to raise a fund to buy, thousands of houses to rent, to build to rent. I mean, are you kidding me? Is JP Morgan kidding me with this comment? Don't they see what has happened to everyone who's done that? Blackstone, Open Door Technology, their stock was 28, now it's 2. Zillow took billions of reserves because of a dumb thing they did of buying houses for rent. So if JP Morgan, what they should do with their money is lend money to consumers. Cut the mortgage rates in half and lend it out to people so they can buy homes. Not go out there and buy all these homes and continue to destroy the American dream. So JP Morgan, I think it's bad form to make an announcement like that and to go into a business that really is in decline, and it makes no sense. So if I'm a shareholder of JP Morgan, I'm really pissed right now on that. So I don't really have much positive things to say, but I think I really need to mention that this comment about Suadi Arabia Oil is something that really important and needs to focus on. So if you're an investor, be careful out there.